Okay, Rukon's video on Sunday, the 6th of November 2022. It's just gone 3:23 am Chicago time. Do hope you are doing well. So, time for another weekend futures market recap where we go through 15 of the largest futures markets and I show you what I'm seeing on my charts. And this week is going to be a little bit different. Normally we go through the tick bar charts and I show you the signals from the better indicators over the last week and looking forward to the next week. This weekend's video we're going to be looking at the longer time frame charts, the minute charts that roll up to the daily charts. Again, still using the better indicators and the signals that are generated, but I think we're at a critical kind of turning point. I think the bottom is in. I think we're going to have a rally, and I've been pretty bullish for the last 2 weeks of videos showing you those signals. And with this last week's activity, we saw a pullback and a little bit of a test, and I think that test was successful, and I think Monday, Tuesday's activity is going to kind of prove out that the rally is going to keep going. So let's start with the Emini charts, the daily all the way down to the 15-minute charts, and we can see what's going on. So first of all, this is the traditional setup of the better indicators, where we have two panels side by side. Left-hand side, everything to do with volume. Right-hand side, everything to do with price. The indicators on the left-hand side are better momentum, down here below the price bars, which is a volume-based momentum indicator. On the price bars, we got better pro-am, which shows you professional and amateur activity. Professionals in blue and amateurs in yellow. Right hand side, we've got better sine wave below the price bars, which is calculating cyclical and trendy activity in 3 different time frames, and then that allows us to put support and resistance lines on the price bars, and breaks of support and resistance break us into uptrends and downtrends. So with last week's activity, we kind of had our breakout above this little pullback resistance level here, and I said watch to see what happens on any retraces and what the professionals do. We need to see the professionals step in on any retrace in order to hold it and break back above this resistance, kind of confirm the uptrend. So we're kind of playing out a little bit of cyclical energy here, pullback to end of trend with these thin lines kind of crossing together, but it could be with Monday, Tuesday's activity that just doesn't play out. We had a strong day on Friday, and if we get back straight above that resistance line, that's confirmed uptrend, and we're going to go hell for leather to the upside. We've tested into the lows, blue professional bars kind of down here. Less and less selling. We didn't get kind of the classic exhaustion sell pattern on the daily chart here, but that's okay as long as we kind of start breaking above resistances into an uptrend. Confirmed uptrend on the daily chart of the E-mini would be above 40.50 here to get us above better pro-am. But the NASDAQ, we're pretty close to those levels here. The NASDAQ is the weakest of the indices at the moment, and the strongest is the Dow, and that's because of the composition of the indices. So the Dow's kind of got a little bit more heavy overweight in energy, and energy stocks are doing well right now, and that's why the Dow is kind of going ahead pretty fiercely. NASDAQ obviously all tech kind of based, and you know the tech rally is played out to some extent with the big kind of push that we had in the last year, and it's kind of sold off pretty hard. That's not to say it's not going to bounce back in terms of, you know, kind of moves back against an oversold kind of condition, but you know that's what's going on, and we can see here the NASDAQ is only just testing this double bottom here. To get a confirmed uptrend, we need to break into an uptrend on better sine wave here, which means we need to get about above kind of 12,000 and about 11,700 here on better pro-am to give us a confirmed uptrend. So it's the weakest of the lot in terms of the indices, and that's what will give us kind of confirmation that we've got a real rally on our hands. I suppose, you know, midterms, we got those kind of coming up on Tuesday, and however long that takes to count and get the results out, but that could be the, you know, the news that gets this rally really going. So coming down the 135-minute chart on the E-mini here, you can see we've got strength with better sine wave painted red, a confirmed uptrend. Oops. Gets us above this 3,897 level here. So if we start to see that Monday, Tuesday, that's good for confirmed uptrend on the 135-minute chart. Again, blue professional bars down here, some exhaustion patterns, bullish divergence. 45-minute chart here. This is the activity that we had Friday into Mondays, where the move was being led by Rambo amateurs. Up here we had a whole family of Rambo patterns. So we know this is a little bit weak. Rambo reversal of an amateur breakout, and so when the amateurs are moving the market, it's suspect and it can be weak, and we're looking for the low of that kind of sequence, the yellow bar, to be broken. And that's what we had. We had some weakness with the Fed news, but the professionals stepped in here and we stepped up on better pro-am. So it's not played itself out on the 45-minute chart on the highest time frame with a nice pullback to end of trend, but we're getting close. These levels kind of need to come together. This whole area needs to hold on Monday for that to kind of play out, that support to kind of come in, and then that gives us the support that we need to get above this critical level here, 3900. 15-minute chart, there we go. That's the amateurs with Rambo patterns up here into last weekend's move, and then we have the Fed kind of coming in, but it gave us exhaustion sell, bullish divergence, blue professional bars kind of coming at the low, and we've held on the highest time frame here. You can see support there, bullish divergence. We're breaking into an uptrend. Yep, this is the pro-am trailing stop is a long way away, but we just need some professional bars on Monday or Tuesday, Monday really, to kind of come in and break above that, and that'll be good. So 13,500 minute tick bar chart, which is roughly equivalent to a 20-minute chart. You can see this is the breakdown that we have, and we've kind of caught down here. Here we're putting in pullback to end of trend on the highest time frame. We've got our exhaustion sell, our bullish divergence. Blue professional bars kind of come in here, little gathering pattern, kind of with an exhaustion pattern, getting the move going. Now, we didn't just see this activity on the E-mini on Friday. We also saw it on the euro strengthening and all the other kind of currencies against the US dollar. So the US dollar starting to weaken, the euro starting to strengthen. So that whole dynamic is really important. And then the other one is the commodity group and bonds. So I'll show you those charts. But first of all, let's just look at the tick bar charts here for, well, this is the E-mini on the 13,500. Simplified view of the better indicators, where we put signals on using the three non-correlated indicators kind of coming together. And so with Friday's activity, you can see here we've got a classic pattern. So the three indicators, we get an exhaustion sell and bullish divergence pattern on better momentum. So that's our volume momentum indicator. Number one, kind of signaling strong. Number two, we're oversold on better sine wave, and that's the background printed in red, showing that the trend could be exhausted on the downside. And then we have blue professional bars kind of come in, and the trailing stop with the blue professional bars gets broken, tested a little bit here at 37.20, and then we break back through it at the end of Friday, and that gives us our triple signal, where all three non-correlated indicators have all signaled in the same direction. We get a long signal on Friday. So that was Friday's activity on the E-mini. On the euro, we had similar things. It was trying to find its level down here, but we've had a whole bunch of blue professional bars come in there. I don't know whether that was Thursday or Friday, but blue professional bars, I think it was Friday, kind of getting this move going, held us here at this point, and bang, we've taken off to the upside. That's super important. So the end of last week I was short euro, and at the end of this week I'm now long euro at the moment. So those are two important tick bar charts, and I'll show you the bonds chart here for all three indicators to come together. We've got exhaustion sell, bullish divergence, number one. We're oversold, number two. And we've got blue professional bars here. We just need to break the trailing stop, and that'll give us three, and that'll give us a signal on bonds as well. So that's all the tick bar charts on those three important markets that are kind of signaling strength at the moment. I know it's kind of counterintuitive. I mean, the news is pretty bad. The uncertainty over the midterms is extremely frustrating. Nobody knows who to believe or what to believe, and what's the kind of real kind of issues on voters' minds, and whether that makes any difference at all to kind of the economy. Whether we get a lamed up kind of president over the next 2 years, and whether that's kind of bullish for the economy in some way, or bullish for the stock market and these markets. I don't know. And then all the news out of Ukraine and so on. Everything I seem to look at is kind of death and destruction, and it's the end of the world coming, and yet the signals are showing strength, and we just need to crack a couple of these levels for breaking us into an uptrend, get above this 3,900 level on the E-mini, and a bunch of other markets are showing strength, and all of a sudden we're into a pretty big rally. So it feels odd to be talking about that given the background, but I think that's the job. Traders just to block out the news and just follow the charts, because all the news is kind of baked into the charts, and you just have to follow your signals. But I must admit, it just feels a little bit odd right now. But anyway, let's look at the longer time frame charts, and this is exactly the same, the better indicators on these longer time frame charts. And the idea here is to look at as close to a daily chart as we can by going down a time frame. So you know that there are 3 135-minute bars exactly in the day session of the E-mini, so we can use the 135-minute chart of the E-mini day session, and using the better indicators that give us 3 time frames, the low, intermediate and high, which gives us the 135-minute, the daily chart, which is 3 times 135 minutes, and then 3 times that, a 3-day chart, which is a little bit nicer than a weekly chart because it signals a little bit quicker. So by using that minute chart, we can get a good sense of kind of the longer term picture. It's a little bit more complicated on the other futures markets, because in the E-mini I just look at the day session, but on the others I look at the full 24-hour or close to kind of trading picture. And that's because the E-mini is almost unique in that all of the activity happens during the day session, and the difference between the professionals and the amateurs, the average trade size in the after hours session is extreme, but that's not the case in the other futures markets. So I look at the whole picture. So with the Forex markets, what we do is you look at a 460-minute chart, and there are 3 of those bars in a day session, and then 3 of those gives us a 3-day chart. In crude, it's 460 minutes, natural gas 460 minutes, and copper it's 460 minutes. But then the ags trade a little bit differently. They have a reduced trading day, and so it's a 367-minute chart, exactly 3 of those bars in a day session of corn, soybeans and wheat. So there we go, and again a little bit different on Bitcoin because that's trading 24 hours. If you're a subscriber to the Better Indicators, there's a spreadsheet that you get access to that shows you how those numbers are calculated, the number of hours and minutes in a day session of each of those markets and so on. But I like it for these signals on the longer time frame charts. So let's look at the Forex charts first of all with the euro. So the activity down here over the last several months, exhaustion sell, bullish divergence comes in. Number 1, we're oversold, way oversold, because you know the euro's been tracking down and down and down. But this is what was interesting. The end of September, whole bunch of blue professional bars kind of down here at 95 came in, and we've been testing and testing, and so the market breaks into an uptrend here, but it's not a confirmed uptrend until really we get above this. You could say, you know, above this breakout point at this level here, or you could wait a little bit, confirm breakout kind of above about 101 on the euro here. So this is this week's activity where we sold off hard, and that's why I was kind of short the euro for the last week and a bit, and now I'm long euro because we had a real strong rally on Friday, kind of getting this move going. Now all this needs to do is kind of get above this 101 type level, and all of a sudden we got a change in trend, confirmed change in trend. This will turn back red again on better sine wave, and it shows that we're in an uptrend. So the last time we had signals back here, June, July kind of time frame, we had some strength for a while, but it gave way eventually, and we turned into a downtrend here at this point. Professionals selling out, exhaustion sell down here, and that gives us the hold at the moment at kind of 95. So the euro important there. British pound has been winging around quite a lot, but we had to have a signal, the beginning of October here. Same thing, exhaustion sell, bullish divergence kind of comes in. Where's our bullish divergence? Maybe it's signaling off this bullish divergence here, but we're due for a bullish divergence signal on British pound. Blue professional bars at the low, near parity, getting near parity, and we've had some strength ever since. Not broken into an uptrend with red bars yet, but with this little U-turn pattern, that's looking pretty good. Above 115, 116 would be super important on the British pound. So that's the pound. Aussie dollar, super sold off hard on the Aussie dollar. We're down at 62, which is an unbelievable level as an Australian to kind of see. We've had our exhaustion sell bullish divergence a while ago down here, and we've just putting in flush patterns ever since. But those are the blue professional bars kind of coming in recently. We come back to test. We got a sign of strength there here with the red up facing arrow. Blue professional bars here, a little bit of a gathering, so maybe getting above 65, 66 kind of here, confirmed uptrend on Aussie dollar. So the Aussie dollar is strong. Japanese yen, which has been a downtrending market for the last year, super big trending move. Never really kind of played this properly this year, and I've been whinging on about the central bank kind of intervening over the last couple of in the last month or so really, and you see these kind of big explosive moves, but we're oversold. Blue professional bars come in. We don't have a proper exhaustion sell pattern down here, but let's see on the Japanese yen if it's starting to hold at these super sold off levels down here just for a bounce in the Japanese yen. Emini on the 135-minute chart here, we don't have that oversold signal, which is kind of missing, which is a shame. We want something like this and this. We had one getting the move going, but we didn't kind of bottoming this move down here. But this is all the blue professional bars kind of coming in at the lows here, 36, 37. We've got red bars here. We just need to get above the trailing stop, which would be a sign of strength on the E-mini. 10 years now, 10 years down here, signals from a month or so ago, and we've got another exhaustion sell pattern with this week's activity, and we're oversold. We got blue professional bars. We just need to break above this 112 level on the 10-year notes, and that'll give us another kind of signal here on the longer time frame charts. Now let's look at some precious metals here. Gold has gone crazy over the last week or so. All these triple signals kind of going off. We got 4 of them here. We got our exhaustion sell bullish divergence comes in, number 1. We got whole family blue professional bars come in here the end of September, and we're breaking above the trailing stop there, and you can see the activity on Friday. Bang bang, 2 blue professional bars. This is almost like a U-turn, kind of getting the move going. They kind of buy it on the way down and then buy it to get the move kind of going through 1700 here. And we're oversold, the background in red, so that's why we've got a whole series of signals on gold. So that's gold. Silver, same thing. Signal went off last month. Blue professional bars at the lows, exhaustion sell, bullish divergence. We just fuss around 19 here, just test, and then we're in an uptrend. We just need to get above 21.30 here, and that'll give us another triple signal on better indicators, and so that's another kind of sign of strength there. So gold and silver looking good. Bitcoin has been fussing around this kind of 19,000 level for a while, and you can see here this is the last signal, exhaustion sell bullish divergence, oversold, triple signal kind of comes in, and what we've been doing lately, blue professional bars, a lot of them kind of coming at the 1920 level. All of these signs of strength, these little up facing kind of red arrows showing sign of strength, and we're above 21 at the moment. So that's been tricky for the crypto traders because we've just been range bound since June on Bitcoin. But now, have we done enough just fussing around down here to break into an uptrend? And again, getting towards 25 and above 25 psychologically would be super important. So those are the precious metals and Bitcoin. Let's look at the bigger commodities. So we got crude. We don't have a signal on crude here, but we've come down, we're oversold, we've broken into an uptrend here. No blue professional bars for a while, but let's see. We could easily go from the 92 levels up to the 105 just to test and bounce off potentially here, but we could have a few days, a few weeks of kind of strength in crude to take us back up there. Natural gas is not signaled down here, but we have a whole family of blue professional bars coming in over the last week or so. So at $6, natural gas is super important. We're oversold. We've broken above the trailing stop there. We don't have exhaustion sell signals, so whether that generates a signal on natural gas, not so sure. Copper. Now, copper had a very strong Thursday, Friday this week, and you can see we got our signal back in August. Exhaustion sell bullish divergence kind of comes in. A whole family of blue professional bars at 340. And we just test and test. Next time in to that test, the blue professional bars step in at those lows and buy it, and now they bought it here. So it's almost again like a bit of a U-turn. So they buy it on the way down, and then they force it up or out of that kind of congestion move at 360, 370. So that's Friday's activity on copper. So that was super strong there. And then the ags. I don't think the ags are so interesting. Last signal on corn was down. I've been pretty kind of downbeat on corn in the last couple of videos, but I think soybeans and wheat are showing a little bit of a reverse. So exhaustion sell and blue professional bars kind of come in on soybeans at this level, and we've got a little bit of strength kind of well, we've got this last signal here with exhaustion buy, bearish divergence. So maybe we're coming back up just to test that 1520 level, and we'll come back down. So not sure there, but wheat, here we go. We had triple signals kind of go off in the last couple of weeks. So blue professional bar stepping in at those lows, kind of down there. A couple of signs of strength. It's holding. It's holding. That's a pretty nasty blue professional bar. Let's see. It has to get probably above that blue professional bar to signal that we're in an uptrend on wheat. But anyway, the the ag's less interesting. What I'm more interested in is the direction of the E-mini, the euro, 10-year notes, and those look like we're getting into a confirmed uptrend, and it'll take the rest of the markets kind of with it, if I've got that right. So let's see. It was the surprise on Friday with the euro when it did this kind of reversal move, that all of a sudden, the top in the USD we might have just seen, and that's why we're getting strength in the euro there. 10-year notes, exhaustion sell pattern down here. Is the Fed going to pivot? In which case, the bonds will rally, because there's an expectation that rates will, they've gone too far and the rates will start to kind of come off. And then we just need the E-mini to kind of break through this 3900 level to give us kind of confirmed uptrend on the E-mini, and all of a sudden we're into a rally on all of the markets. So again, feels super strange to be talking about this, particularly with the level of uncertainty, and just everything I kind of tend to listen to is pretty downbeat at the moment, but the charts are saying otherwise, and we just need a couple of levels to be broken to the upside, which should give us kind of confirmation that we're on our way. So let's wait and see. With the uncertainty Monday into Tuesday, it's going to be interesting trading, but those are the levels that I'm looking at the moment, and that's what's got me interested on my charts. So good luck next week. Hope your trading is going well.